Is the big tech bubble about to burst, or is this just a short-term dip? Friends, the U.S. stock market is going through massive turbulence right now. On one hand, defensive stocks are becoming the safe haven, while on the other hand, big tech is seeing a huge correction. Today we'll cover 5 key stocks: Walmart, Nvidia, Tesla, Apple, and Palantir that will decide the direction of the market in the coming weeks. Make sure you stay till the end because I'll share which one looks the strongest for long-term investors. Let's quickly look at the broader market. The S&P 500 is currently on its longest losing streak since January. Tech stocks are under selling pressure as investors rotate into defensive names like consumer staples and utilities. The biggest catalyst? Fed Chair Jerome Powell's Jackson Hole speech. If Powell hints at rate cuts or a dovish outlook, markets may bounce. But if he takes a hawkish stance, more pain is likely ahead, especially for growth and tech stocks. Walmart. Let's start with Walmart, the retail giant of the U.S. Walmart recently reported earnings with over $170 billion in quarterly revenue, slightly above analyst expectations. The key highlight? Walmart is doubling down on e-commerce and Walmart Plus membership, trying to challenge Amazon's dominance. The company is also investing heavily in AI, supply chain automation, and robotics to improve efficiency and customer personalization. But margins remain a challenge, since groceries and essentials are low-margin categories. Inflation is also shifting consumer spending habits. Overall, Walmart looks like a defensive growth stock, perfect for long-term investors during volatile markets. Now let's talk about the AI king, NVIDIA. Over the past year, NVIDIA has delivered multi-bagger returns. But recently, a major concern has emerged: U.S. government export restrictions on high-end AI chips. This could impact NVIDIA's ability to sell chips in regions like China and the Middle East. It's a double-edged sword. Demand is extremely strong, but regulatory restrictions might limit supply. Still, NVIDIA has a strong pipeline across data centers, gaming, and automotive AI. In the short term, volatility will remain, but long term, NVIDIA's AI monopoly is largely intact. Next up is Tesla, Elon Musk's EV powerhouse. Tesla stock is under pressure right now due to slowing sales in China, where competitors like BYD and NIO are aggressively capturing market share. Another challenge is Tesla's premium valuation. Investors are questioning whether its growth trajectory can continue at the same pace. But Tesla still has unique advantages: its autonomous driving technology, global supercharger network, and growing energy business. The upcoming quarterly deliveries and earnings reports will be critical in deciding whether Tesla continues its bull run or faces deeper correction. Now let's discuss Apple, the world's most valuable company. Apple is facing a demand slowdown in China and a globally mature smartphone market, which limits growth. However, Apple is preparing a big move, integrating AI-driven features into its ecosystem. This could open up entirely new revenue streams beyond hardware. In the short term, Apple may face pressure, but its loyal user base, massive ecosystem, and huge cash reserves make it resilient in the long run. The final stock on our list is Palantir, a data analytics and AI company best known for its government contracts. Palantir shares recently spiked after news that it signed new AI defense contracts with U.S. agencies. The company has always been controversial, but the AI boom is making Palantir's role more critical. Yes, valuation looks stretched, but consistent government contracts and rising enterprise adoption could make Palantir a long-term AI play. So friends, these are the 5 most important U.S. stocks to watch right now. Quick summary: Walmart is a defensive, safe stock. Nvidia is the long-term AI monopoly. Tesla is a valuation and competition story. Apple is in an AI transition phase. And Palantir is a high-risk, high-reward AI play. The market is full of uncertainty, but history shows that volatility creates the best opportunities for long-term investors. So here's my question to you. Which of these 5 do you think will be the biggest winner over the next 5 years? Drop your thoughts in the comments below.